What's happening on Monday the 16th? I know it's not my normal Tuesday, but tomorrow I have continuing education. So actually it's continuing education like season. We'll go for a couple of months trying to get update every license because we've got 30 different states we do business in. So we have to carry that many licenses. With those licenses, there's continuing education that happens with each particular state, right? So some require an hour, 2, 3 hours. They also have a national license we have to update, which is 8 hours. Well, 7 hours of national stuff, and then 1 hour of a specific state. So we throw Arizona into that one. So tomorrow, it's like I'm locked into sell, and I have zero coverage. So I've got to get this out today, let you guys know what's happening. Just a couple of things. It's not going to be a real heavy communication day for me today as far as information to give you, because we'll get more on that later in the week. But let me show you this. On the 19th, this week, Thursday, 12:30 p.m. Eastern time. All right, so that's 9:30 Pacific, 10:30 Mountain, 11:30 Central, 12:30 Eastern. I'm going live on it with these guys. That's a Not Your Average Investor show. Live conversation about what's going on with interest rates, what you can do on the real estate side. So we got a couple of different people in here. We're going to be spitballing things back and forth from the lending perspective, from the real estate perspective. So you want to tune into that one, drive as many people as you know towards that one. We'll see how this thing goes out. So looking at the mortgage-backed securities, which is driving our interest rates, let's take a look here. Let's see what we got going on. Look, it's wanting to drive above this channel. This is the channel that shows the price of the security the day they started announced quantitative easing. They announced it, and this closed that full day's trade. That's a lot of movement. Look, it's taken us from the time we broke into this and stayed into it. Let's say right here. We stayed into it right here, which was August 13th, all the way to today, which is September 16th, nearly a month's worth of trading. That was 1 day's worth of trading right there. So whether or not it stays above it, I'm guessing it's gonna. I'm gonna have to guess it's gonna. I didn't think it was gonna break through that, but then we have the day they started quantitative easing. So this is all the market's involvement with the announcement of quantitative easing. This is gonna be the market's involvement before they actually started quantitative easing. And this is this whole big window, which is nearly 200 basis points. Actually, a little bit more than that. 209 basis points worth of movement, which is equal to 2 points in cost worth of movement throughout this whole window right here is what we're looking at. And now that's with your owner occupied stuff. Investors might be a little bit of different animal, different number than what we're working off of here because it's a different coupon, but that just gives you an idea what the market's doing. Now, what's going to drive this? Now, people are saying, well, the Feds are going to drop the rate. It's going to help us out. It's already baked into the market. The Fed dropping the rate is already baked into the market. They have an expectation. If it's not met, that could negatively impact this, driving interest rates up. What I think is going to drive this is the stock market. Jobs in the stock market. People keep showing weak jobs, going to reflect here positively. If the stock market gets, takes any hits, it's going to reflect here positively because that's money's got to go somewhere. Those are things that drive this up. Now, whether it exceeds the level of the value of that security beyond what the date that the government started investing capital into it, we will see. I personally doubt it, but I doubted that it would get to this height and hold it. We'll see if it holds. New things all the time. Money's got to go somewhere, and they're printing a shit ton of it. That's the other part of it. We have a lot more money in circulation than we did back before. So maybe if we took that into account, that might show us where the real value of the security might lie when you consider how much capital is in circulation compared to what it was in 2008. So that's a whole other animal. So there's a lot of things to take into consideration that we may not be looking at here. And we don't have enough data to look at. They're not going to release all this data. Why would they? The more data they release, the more incriminating it is for those who are running this things in the background. So that's where I'm at right now. It's where I'm looking at. It could very well be that we're at a peak. I think we're at a peak. But what I think and what the market does, sometimes two different freaking things. We've called it pretty closely, but there's been a couple of foul balls here that we just never saw coming. Thanks, guys. We will talk to you on, actually, we're going to talk to you on Thursday, September 19th, because you're going to jump on, you're going to register. We can get the link in the notes here, so you can click on that and get registered so you can be part of it. We've got to see you there.